Hi, everyone. Thank you for joining this last in our four-part climate finance webinar series. We're so excited to have you here. As a reminder, we will be recording the session and we'll be sharing the recordings from all four webinars in the series in the coming weeks on climatelinks.org. So stay tuned there. You'll also receive an email. Just once again, thank you everyone for joining. It's the last webinar in our climate finance webinar series. Very excited that you're all here. We are recording today, so you will receive an email in the coming weeks with a link to the recording to all four webinars in the series. And there will be a chance to ask our panelists questions today, so please use the Q&A button for that. And with that, I'm going to turn it over to our moderator, Amanda.
Thank you. Thank you very much, Lindsay, and thank you all for being here with us today. I'm diving in from London, so after lunch, I have gotten my coffee. Hopefully, all of you have as well, and are ready to embark with us in a very interesting panel discussion. Today, we are here to talk about something that for me is particularly interesting within the climate finance landscape, which is innovation, particularly scaling innovation, and what are the types of organizations that can help drive it forward. For a quick introduction on myself, my name is Amanda, and I work at the Climate Policy Initiative. Within CPI, I'm focused on the Global Innovation Lab for Climate Finance, or just the lab as we call it for short. Here we support innovative financial mechanisms in their development and getting to market. Within these contexts, I think there's two things that we can all agree on. The first is that we really need more investments flowing into climate change mitigation and adaptation. And the second is that we are really not going to get there if we go about doing things as we have always done them. So this means that innovation is really a key catalyzer for change, and we need to be supporting it in multiple layers of the finance ecosystem to be able to drive it forward. In the lab context, we work at the financial vehicle level, but immense work is also needed to develop investable pipeline, which means working with startups and SMEs that can either create new services and products or implement modifications in their approach to business to make sure they are contributing to climate change mitigation and adaptation. I think for anyone that has ever worked with innovation, it's also very clear that choosing to follow the path that hasn't been built yet, developing a new path, is anything but seamless. It's actually typically a pretty tough process in general. So starting and growing your venture project is challenging, but we also add the component of attempting a positive impact, which can make things a little bit more complex, but definitely not impossible. I think the good news here is that there are a lot of people and entities that have thrived in this context, and there are many opportunities to harness their support. That's why today we want to discuss innovation in climate finance, particularly by thinking about the catalytic role of climate ventures and accelerators. And for this, we have invited three people that are very well positioned to share their experiences with us. I'll introduce them very briefly, then pass the word over to them to introduce themselves. So first we have Kathleen Whale joining us. Caitlin is the CEO and founder of Kinjani, where she actively works to support African climate founders. The background in civil engineering and finance, Caitlin has worked as a sustainability consultant, raised a 35 million fund, led climate and net zero initiatives within Deep Tech Fund, and many more remarkable feats that she will get a chance to share in a short while. Joining her, we also have Mylise Carrero, the managing partner of the Catalyst Fund. I got a chance to meet Mylise last year when she went through the lab process, and that was actually an incredible experience from my part. Mylise has a diverse background, having worked in places like IFC, OECD, and Grameen Bank. But I think most relevant to the discussion that we have today is her experience with multiple early stage startups in Africa, Asia, and Latin America. She has firsthand experience in entrepreneurship and founded her own fintech, and now engages with the ecosystem through investor role in the Catalyst Fund. And last but definitely not least, we have James Mwangi, who's the founder and CEO of Africa Climate Ventures, where he's working to help build and accelerate transformative, climate smart, and carbon negative businesses across the continent. Like our other two panelists, James also boasts an impressive background, having worked as a global managing partner at Dahlberg Advisors and having led their expansion through Africa. With this, I fear you have heard sufficiently from me, so I will pass the word over to the panelists so that they can introduce themselves and their initiatives firsthand, likely a lot better than myself. So how about for this, we follow the same order, and we can start with you, Caitlin.
Amazing. Thank you so much, Amanda, and the Climate Links team for setting this up. I think the best way to introduce what we're trying to do at Kinjani is to show you. And so we'll show a short video and then I'll give you a brief intro after that. Thank you.
Kinjani is an African climate venture builder. We're helping technical, commercial, and operational founders in a cohort approach build climate companies in Africa by Africa. So at Kinjani, we do the hard things. And what that looks like is helping founders who are building physical infrastructure, looking at how they can remove carbon, increasing biodiversity, and access to water. That is leveraging the natural resources that we have, our space, our oceans, our minerals, our biomass, our talent in Africa by Africans. We believe Africa has a role to play in this climate crisis. It's actually what I was dreaming of. It's a beautiful combination of things. By investing in the humans and the time and the ideas, you're enabling an environment for growth to occur, environmentally and economically. It's Ubuntu. What we're really looking for is investment partners who really believe in creating the next generation of what our planet looks like, with the people who are thinking deeply about the systems, the science, and how these pieces come together. And we needed to do that in a way that can scale it. And we want to double down in the ones that really have the biggest impact and financial returns. Carbon removal alone is going to be bigger than the oil and gas industry is today. And it needs to scale much faster than that industry and every other industry did. So by investing in Kinjani at this stage, you're not only investing in 90 founders building 33 to 45 climate companies in sub-Saharan Africa, you're also investing in solutions by Africa for Africa. And you're being part of the journey, providing the right types of capital for these hard innovations to scale sustainably.
Awesome. Thank you for sharing that. And I wanted to share it here because it's actually a huge thanks to the USAID Southern African Sustainable Finance Activity via the Climate Finance Development Accelerator that we made this and hosted the Kruger to Canyons Hackathon, which is with the 30 founders who have just started on our first program. And we like to describe it as an entrepreneur first meets deep science ventures or a new lab. But how the founders are describing it is more like Love Island meet Shark Tank. And we think if we don't make it in building climate ventures, we'll start a Netflix series. But really great to be here today and looking forward to speaking with these brilliant panelists, because I think we're each trying to solve something in the same value chain and really growing the pie, and super, super grateful to be here. And just a very brief background on myself, because that's what I was supposed to be doing and not showing videos, is I'm Caitlin. I'm from South Africa originally, started my career in the mining sector as a civil engineer, designing and rehabilitating mine waste facilities. I spent the last decade in London, where I was in renewable energy infrastructure finance, then deep tech venture capital, before being part of a carbon removal fund, investing globally in early stage climate ventures, and just moved back to South Africa to try and get more local founders being part of that journey, which we will be talking about more today. Thank you. I'll hand over to who is next. Amanda, I'll hand back to you to hand over to the next one.
Thank you. Mylis, maybe we can go on with you then.
Great. Hi, everyone. It's a pleasure to be here. And I must say that video was super cool, Caitlin. So tough act to follow. Amazing. Definitely so inspiring to see how many people are trying to tackle these issues today and in different approaches. So I think that's what excites me about this webinar in particular, and the three of us sharing our perspective. So I'll tell you a bit more about what we do at Catalyst Fund, but quickly as a background, I'm Mylis. I'm the managing partner of the Catalyst Fund. I founded it 8 years ago, and we went through several iterations, and this is our third fund, but our first fund focused entirely on climate adaptation and resilience. And before doing this, as Amanda briefly mentioned, I've worn 3 hats. So I've started my career in the climate policy space at the OECD, and also at Grameen, where I was designing climate smart loans for underserved communities that don't have access basically to emergency type loans for climate disasters, focused on Africa and South Asia. And I then became an investor. So second hat, actually working for the IFC and several other impact funds, focused primarily in East Africa, well, actually sub-Saharan Africa broadly speaking. And then I became an entrepreneur. And that was probably the toughest thing ever, and inspired very much our approach today in what we're doing at Catalyst Fund to be the best partner to founders building climate solutions across the continent. So now onto the fund itself. I hope you can see my screen. So what we're doing at Catalyst Fund is investing for a climate resilient future in Africa. So we want to partner with founders that are building tech solutions, particularly focused on adaptation and resilience, which, as many in the audience know, is only getting less than 5% of total global finance capital, climate finance capital. And it is, however, extremely urgent and necessary across many emerging markets, not just Africa, but particularly in Africa. And it's tended to be overlooked, but we see a lot of opportunity. And the bet we're making is that actually across Africa, there's a lot of assets already that make a low carbon and resilient future possible. And it's actually representing 2.8 trillion investment opportunity by 2030. And that is because of all the things that Caitlin spoke about, the talent, the abundant and affordable land and natural assets, the untapped renewable energy that exists, rich biodiversity, and frankly, new category defining business models and sectors and industries that can emerge today and really play a big role, not just for Africa, but also for the planet as a whole. So when we made this bet, we though identified a key challenge, which is all of these preconditions are there, but what's missing is investment capital that is fit for purpose for the reality of the continent, and especially at the early stage. There's a lot of companies out there trying to innovate, trying to bring businesses to market, but they just are not getting past that valley of death, which is getting longer and longer, especially in this funding winter that we're facing. And that's the gap we want to fill. But we want to invest very early. So typically we're the first partner to founders that already have a product in market, that already have a team and some traction, but need to now focus on getting to product market fit and scale. And we back them with capital, but also a lot of hands-on tailored venture building support. So we don't build businesses from scratch, but really take the entrepreneurs from 0.5 to 1, basically, by focusing exactly on the challenges that they're facing at that point in time and complementing their teams. And I'll tell you more about our approach. And then the other things that differentiate us is to be very thesis driven. So investing across a number of sectors within adaptation, and then having a community-led approach to it. So how do we build a network of investors, other investors that can come in? And interestingly, over the past year, 1 in every $3 went to climate tech in Africa, if we look at the overall data for startup funding. And the number of funds as basically double that focused on climate tech, which is all great signals for the market, yet we're still behind the curve in terms of where we should be. And from a sector perspective, we landscaped the opportunities and see that every sector of the economy will have to adapt. So what are the technologies or the tech-enabled business models that are enabling communities to manage climate risk, adapt their livelihoods, and build long-term resilience, all, of course, with also a low-carbon mindset in mind. So one pillar we look at is fintech for climate insurance. That's, for example, fintech for climate resilience, so that's climate insurance, for example, or climate data solutions for different value chains. We look at sustainable livelihoods, like climate smart agriculture, food systems, or land restoration solutions, and also at essential services like water management, cooling, waste management, and healthcare. Like there's a strong connection between health and climate that people sometimes raise eyebrows, but it's actually a fundamental piece of the plan in the national adaptation plans of many countries. And we do see a role of technology there as well. So to keep it short, today we've invested in 22 companies. The pipeline has actually been very strong in 10 of these adaptation subsectors that we've classified. And the portfolio is performing really well. They've already raised twice the amount of capital we put in, and we hope to see that continuing. And finally, from an impact perspective, we're hoping to, with this approach, to make 20 million lives at least more resilient to climate change over the life of the fund, while at the same time mitigating emissions, reaching women, creating green jobs, and touching other key environmental metrics around liters of water conserved, for example, or hectares of land restored. And of course, I will say this last thing, we can't do it alone. So I think it's extremely important that every fund that focuses on climate in different shapes and forms collaborates. And this is why conversations like this are so important for the ecosystem.
Thank you so much.
To you, Amanda.
Thank you so much, Maëlys. That was a great introduction. To wrap us up, I'll pass it over to you, James, to introduce yourself and your initiative.
Great, thank you, Amanda. And it's no small challenge to go after two very dynamic and innovative and transformative leaders in the space. So also with very compelling presentations. So I'll talk a little bit about my work. It echoes a lot of the points that both Caitlin and Maëlys have talked about, and I'll maybe ground it a little bit in a picture. In terms of my own background, as you already noted, I spent most of my life working in economic development as a management consultant, and until a few years ago was fairly ruthlessly and narrowly focused on the question of how do you create large-scale youth employment across the continent. And that actually brought me to climate. So I'm actually an employment person coming into climate rather than a climate person going into employment and economic growth. And the reason for that is what I want to spend a little bit of time chatting about as I go into the work that we are doing at Africa Climate Ventures, which is this idea of this unique opportunity that Africa has to really prosper through climate positive growth and to invest in climate positive growth. So what do we mean by that? I think both Caitlin and Maëlys already alluded to this, but it's important to really proceed from an understanding that what we are saying is there's a big climate change challenge across the continent that needs to be dealt with. But Africa also has some unique assets and unique pathways to contribute to global efforts to achieve net zero. The assets we've already heard are our vast renewable energy potential, really, some of the world's best renewable energy resources, mostly untapped, our young and growing workforce, and the natural resources, whether they be land, geology, minerals, biodiversity, et cetera, that are going to be critical to any pathway you can imagine to get towards that net zero for the planet. Now, very often we tend to think of Africa as a very small contributor to global emissions, or around 4 or 5% of global emissions today. But when you think about the path to a truly sustainable and balanced planet and net zero by 2050 and beyond, you're really talking about the imperative importance of Africa in particular doing three things. The first of those is embracing low emissions consumption and production, essentially leapfrogging to green technologies, which are particularly attractive for Africa because A, they work better in Africa than anywhere else, and B, the technologies have advanced to the point where they're a superior option for most people anyway. And here we're talking about, for example, renewable energy, e-mobility, various forms of clean cooking. So that's low emissions consumption and production, and that's for the fastest growing market on earth, just based on demographics. The second thing is not just thinking about Africa as a taker of production from elsewhere in the world, but saying if we have the energy, if we have the natural resources, if we have the labor force, it stands to reason that one of the ways we will decarbonize particularly hard to abate sectors is to do more manufacturing and green industry in Africa as a share of total global industrialization. So becoming a leader in the embrace of green industrialization as a leapfrog opportunity where Africa is more competitive than other parts of the world. And then finally, it's recognizing that we have probably left, no, not probably, we have definitely left the challenge of reducing our emissions too late. And we will need to build that vast industry that Caitlin particularly touched on around carbon removal in a range of ways. This is both through conserving and preserving nature, as well as innovating across a suite of technologies that either solely focus on the removal of carbon as efficiently and scalably as possible, or do so in the context of meeting other needs, such as helping farmers better manage their soils and so on and so forth. So these three pathways, if you add them together, actually point to Africa as a pretty critical player in the global race to net zero, and one that and that story as being one where we're selling the continent as a place that grows its economy by attracting investment to, on a net basis, reduce global emissions. Now, what we set out to do at Africa Climate Ventures is quite simply build global world beaters that build on these pathways. Larry Fink and many others have observed that we are entering, or we are in the midst of a century in which the most transformative companies will almost certainly focus a good chunk of their activity on solving the critical challenges of climate change. Just because we have to. The alternative to this not happening is us going extinct as a species, which I think is not something anyone would say they want to see happen. So there will be these big companies, and our view is the advantages that Africa has mean that a number of these climate unicorns, actually probably a disproportionate number, will either be founded in or do a disproportionate of their work, proportion of their work in Africa. So how do we realize that? We set out to tackle this issue as a venture builder through three real levers that we bring to our work. The first one is accelerating technology transfer to the continent. So identifying new sectors of climate technology where there's specific reason to think that Africa is the best place to do a particular piece of work. When I was younger, a lot younger, I played basketball in high school. And at some point, I asked my coach why I kept on moving further down the substitute bench and then on into the supporters group as we all got older. And what he said is, James, I can teach you how to shoot. I can teach you how to dribble. What I can't do is I can't teach height. And I say that because when you look at the requirements for many of the key climate technologies out there, geology, latitude, soil chemistry, those are critical aspects that enable whether a technology will work better or worse. And it doesn't matter how much a team wants to found their business and grow it in a very predictable, traditional startup environment. You can't teach those things. You either have those advantages or you don't. And that means those African countries that do have those advantages can build these businesses at scale. The second thing we do is we scale out successes. So we do have companies across the continent that are exhibiting traction in the climate space, but very often you're asking founders who've cracked delivering a climate solution in one market to suddenly figure out 50 plus additional ones. Can we help them do that much faster? And then finally, there are hidden green gems across the African industry, and part of our role is saying help them monetize and scale up their climate contribution as a core part of their business, even though they may not have recognized it previously. Since 2023, when we got started, we've looked at quite a few opportunities. We started, considered over 20. We looked at over 70. We looked at 20 in depth, and we made 4 investments that maybe give you a sense. And I think it is important to have a very real sense of what this can look like. Cocoa Networks is a clean cook stove business focused on really removing or reducing emissions from deforestation while addressing indoor air pollution and delivering a desirable product for African consumers. And we took that business, which is already quite operating at massive scale in Kenya at 1.3 million households. We helped accelerate its entry into its second market and hopefully others in the future. At Great Carbon Valley, we are saying, how do we unlock the potential of the East African Rift Valley to be one of the most important industrial zones on planet Earth because of its distinctive geology, its energy profile, and the particular kinds of industries that can find best expression there. So we're actually developing, working with asset owners in the Rift Valley. We're developing in that green industrial park concepts and engaging with global technology leaders to deploy into those sites. At Safi Organics, we're making fertilizer using biochar. And later on, and probably offline, we can talk about why biochar is so important. But essentially, we're both removing carbon from the atmosphere at massive scale while delivering a high quality organic fertilizer that farmers like and that is boosting their yields and improving soil health and improving the broader ecology and air quality. And then finally, in partnership with Undo, we're piloting a technology called enhanced rock weathering, where we are using soil, rock chemistry to actually lower soil acidity, deliver a service to farmers in terms of boosting the fertility of their soils, while again beginning that journey of removing billions of tons of carbon dioxide from the atmosphere using a natural process that is accelerated through science. The way we think about our path is we are hoping that with our first few investments, those are the first 4. We hope to do 15 in our first journey. And from those 15, we hope to contribute over the next 8 years at least 100 million tons of either avoided emissions or removed emissions. And the interesting thing is just those 4 and just the management cases on those 4, if conservatively accounted for, already have a clear pathway. And I mean, there's many things that can go wrong in that valley of death that you've heard of. So Maylis will be looking to you and others for help crossing it. But those 4 already, cumulatively are on track to contribute something like 18 million tons of both direct emissions avoidance and removals, which makes it a pretty compelling portfolio, even with the relatively modest amount we've been able to invest to date. And the idea here is whether it's the avoidance of emissions from deforestation with clean cooking, whether it's really bringing industries like direct air carbon capture and other green industries that avoid emissions. We talked about avoiding emissions from fertilizer use and actually removing carbon through biochar and removing carbon through geological solutions via enhanced rock weathering. In each of these cases, we think that these are sectors where the growth room is functionally infinite. And I think they are not the only ones out there on the continent. We're keen to pursue others. So what I'll leave you with is the idea that we need to invest in a very different vision of the continent, not as a climate victim, but as a critical part of the global climate solution. And we are calling upon young Africans through our investment and through working with them to build and structure and scale businesses to see themselves as a generation that's actually called to a very distinctive and very compelling mission, the mission of doing nothing less than saving the world from the climate crisis. Thank you for your time, and I'm looking forward to the conversation.
Thank you, James, and thank you, everyone, for the great introduction. James, you showed us a little bit about some of the companies that you have in your portfolio. Maylis also had a little bit of that in her presentation as well. So maybe we can use that to dive deeper into our first questions, which I want to know a little bit more about what are the types of entrepreneurs you are working with. So can you tell us more on typically the size of the projects and the size of the transaction that you are typically supporting? Maybe we can follow the same order and start with you, Caitlin.
Yeah, sure. Very happy to. And maybe to come back to this idea of the Love Island, the reason that we have created this cohort approach is really to make that step into entrepreneurship that much easier by creating a community, paying stipends to founders so that they can take that first step into entrepreneurship, and really looking at bringing diverse founders together. And I say diverse meaning engineers, scientists with commercial and operational co-founders. And I didn't share specifically who is in our cohort, but I can share a slide if this allows me here. Just give me 1 second. So the themes that we have recruited within are all solutions that are building climate resilience, circular economy, and having a carbon removal, biodiversity, and water impact. But we've really hinged them within core themes, and it's cut off some of them. But so from ocean, so looking at ships, sinks, aquaculture, water, resilience and infrastructure. So urbanization, I think everyone knows the stat that we're going to have 11 megacities in sub-Saharan Africa, each that don't exist today, that will be bigger than Singapore is. So there's going to be a lot of cement, and we need that to be green. Materials, minerals, we're going to need 5 times more mining if we're going to hit any of our net zero scenarios for batteries, wind turbines. And a lot of those critical minerals sit on the African continent, as well as with food systems. And so what we saw when recruiting from across the continent, for this first cohort where we've now just moved them into the incubation phase, we've got 23 founders. They came from across sub-Saharan Africa, and we really do want to keep that approach. So we've started with the first one focusing on Southern Africa. So 2/3 of them in this cohort are from Southern Africa, and then 1/3 from the rest of sub-Saharan Africa. But we saw innovations or talent coming from across sub-Saharan Africa, which is where we focus on, with a really big hotspot in Kenya for a lot of the resources that James mentioned, like the Rift Valley with access to unlimited geothermal energy, as well as the right geology for sequestration of this type of material. And in South Africa, what we found super cool is and also speaking to what Undo, there's a whole lot of minerals in South Africa, and actually being able to work with the organizations like Anglo American. They sponsored one of our hackathons, which is, these are the key pain points that we have. How could we use innovation? So in our cohorts of plant scientists, ex-McKinsey consultants coming together to look at, could we use hyperaccumulators and do phytoremediation and potentially phytomining, which is some of the most cutting edge technology globally, which is perfectly placed to be doing it here. And so it really does range across those 6 systems, probably the least in the ocean space within this first cohort, and the most within the food system space. And you're seeing these hotspots like South Africa and Kenya, which were our 2 highest application rates. But I'd love to hear a bit more from both other panelists, where you're seeing some of the later stage deals coming from on the continent as well.
Thank you, Caitlin. Maybe we can jump. Well, I see, James, you unmuted yourself,
Yeah.
so I'm sure if perhaps you want to
Yeah.
respond to Caitlin last comment. So maybe I'll pass the word over to you and Miley's afterwards.
No, I may have neglected to mute myself in the first place, but I'll go now just to avoid the churn. But so how we've approached this is, we first of all proceed from this kind of analysis of where are the sectors of particular comparative advantage for Africa, because the question we are asking in a quite focused way is, where is it that African companies will have unfair advantages over the rest of the world, where you can actually see a path to building world-beating companies. And so we identify sector after sector where we think, actually, if something exists here, here are the features it may have. And we've tried to be fairly focused in saying, what do we believe are the winning features in a particular space? And the next question we ask is, are there players already doing what we think could be a compelling thing? In which case we'll pile on if we are in time to be helpful. And if that doesn't exist, we will start the business. We'll actually, so we have gone and done greenfield opportunities. Our typical investment ticket, we initially commit something in the region of $1 million, stage gated through a first phase. And our expectation is to be then able to participate in follow-on rounds up to some point. So, in due course, in a really successful business, the ACV component would end up being $4 or $5 million of in cash and in kind contribution over the course of its journey. However, early on, we are spending very small checks in some cases. So if I take Africa, Great Carbon Valley, that's an idea that began as a concept within our team and partnerships that we're building with global climate technology leaders. We have then gone out and found a world-class CEO with substantial startup experience in the technology space. And she is then building a team around herself, which we are funding, even as she now raises capital from other investors outside. On the other end of the spectrum, you have a company like Safi Organics that's actually been working in relative obscurity for something like 7 years, doing some really amazing stuff, and is only now getting onto the global stage as a recognized gem. And in that case, we invested like any other venture investor as an early a fairly early venture investor. I think we're the first actual external capital they've ever raised, and we've acquired a significant minority in the business. But we climb in very specifically as almost a co-founder team, where we are actually out there doing everything from carrying bags of fertilizer to helping them market their carbon credits. And the thinking here is, how do you then articulate a path from where we're coming in to the point where you're talking about a real climate unicorn, a multi-billion-dollar success story on the continent? So there's a range of ways to do that. We tend to be very driven by a very specific thesis on what we think is possible that we then act upon.
Thank you, James. To wrap this round, Miley, I'll pass it over to you to share with us typical size transactions that you're supporting.
Absolutely. I guess we take a slightly more traditional early stage venture investor approach compared to ACV and Kinjani. So we look for, first, of course, we're very clear on the kind of sectors and the types of solutions that we're looking within those. So as we do the sourcing for the solutions, we need to have conviction around how is this actually going to have an impact, as I mentioned, in terms of adaptation and resilience in the long term, in the short term, is the business model defensible? We're looking for teams that have sectoral knowledge and can actually take the solution to the next stage of growth. And deeply anchored, right? So we only back the local founders and know their markets, and also have actually a target around women. So we want to have a portfolio with 40% women founders and co-founders. And then the business has to have generated some revenue. So there needs to be a little bit of proof points around traction. Like, are people actually, buying this, whoever the customer type is? And is there enough data for us to come in, see how we can improve it, see how we can work with the founders to reduce the risks, the early stage risks of building a business, and then take it to the next level. So those are the parameters. We invest Pan-Africa, so we actually are not geographically constrained in the continent, and that's helpful because I think it can make us a bit more opportunistic. But yeah, broad strokes are those I mentioned. In terms of ticket size, so we typically come in with $200,000 as the first ticket. And that's quite standard because it allows us to go faster. Like, we wanted to also take advantage of, there's no time to waste. This is the time to back these businesses, put a little bit of capital in, and then follow on into the best ones. So we will put 200K into 40 businesses, then we'll follow on into 20 at seed with $500,000. And then finally in 10, so 25% of the portfolio with $1.5 million or so. So total exposure will be just above $2 million for those that make it all the way through. But what that helps us do is really capitalize the businesses that will make it while taking early bets, like and taking risk in an emergent and nascent, sector. And kind of accompany them through that period of valley of death I was mentioning. And at the same time, because we do so much venture building up front, that also serves almost as a de-risking for our own follow-on and super due diligence. So we're really, really close to the founders, almost become co-operators with them. So there's similarities, I guess, with the both models of ACV and Kinjani, and then, follow on with more capital thereafter.
And sorry, Amanda, I realized I didn't answer your question about ticket sizes, but just to mention, we start with $30,000 per company, which is on a founder by founder agreement. And then we look to follow on with 125K all the way up to 500,000 when they can get typically what's required to get first offtake.
Thank you for complimenting Caitlin. Miley, in your answer, you shared actually in your introduction that you're quite thesis driven and you typically have a clear view of the sectors and solutions when you're thinking about the pipeline. So I wanted to hear from you if you could maybe elaborate one kind of what is exciting you right now in terms of new technological innovations in the resilience and adaptation space. That's one question, and another I'll sneak two in more broadly is when we think about adaptation and resilience, what are the major myths that you have encountered so far, and how has your experience been in this field?
Great question. I'd love to hear actually what others think too. So on the first one, we definitely are excited about multiple type of solutions and business models, but I would say we are seeing a lot in the pipeline around climate smart agriculture solutions that and there's actually such a diversity within that terminology that I find quite compelling, because it means innovations are going in different directions. Business model scalability can take different paths. So in particular, I'm really excited about the precision agriculture solutions that can also enable the sale of carbon credits as an additional revenue generation. I think that's really key. And at the same time, basically achieve two things: increase income, which is a key fundamental target, I think, when we think about resilience broadly for farmers, and also enable a transition towards a low carbon or sustainable regenerative agriculture. And that could be solutions that use soil sensors, solutions that use data in various sources from satellites or IoT devices to then give insights to farmers. And typically what I see is it takes a combination of tools, right? So you have maybe your data insights, you'll have your tool that allows you to reduce water usage and fertilizer. And you'll also, though, need to provide market access and financing, right? Whether it's insurance or credit and so on. And that well-roundedness of those solutions make it more palatable. So actually farmers want it and they want to buy it, they see the value. And I think value creation early on is key for these solutions to actually reach market, right, and be acquired. But also we're equally really now seeing a lot around climate data type solutions that can be applied to different verticals. And one of them, for example, is in the urban environment side of things, where you can use a lot of data ASS to reduce energy consumption or enable transitions to renewable. We're also seeing climate insurance solutions coming to the forefront now. It's the business model hard to crack, so we're excited that founders are trying to figure it out. And then there's one darling of mine, which is in the land restoration space. It's a company in Morocco called Centigreen, and they are fighting desertification when desertification rates are just so rapidly increasing, like in North Africa in particular, in Morocco especially, and they are using a low-cost desalination units, drip irrigation systems, and ancestral agroforestry techniques, frankly, to regenerate soils and create oases, because oases are man-made, and so that will reboost the soils. And allow farmers to actually farm and earn an income, build resilience, and adapt. So that's a flavor. On the myths, I'll go fast, but I think maybe 3 or 4 quickly come to mind. First, adaptation business are not profitable, and maybe they'll never be. So as an investor, you'll know financial returns. I think, adaptation is not something that is solely needs to be driven by policy or governments. There's a role for the private sector, and they can be profitable. You just have to figure out the technology and, again, the composition of the business model underneath. Second is the market is too niche or too small. Like, are there enough solutions? Again, we think that the climate impacts are felt across a number of sectors, so it depends on how you define adaptation, where you look. And it's however, I think the definition across all taxonomies to date is rapidly expanding, which is positive. And within those, there's, I think, a lot of opportunities that are being now identified. Third, that it's the returns are too long-term to make sense for the private sector. Again, I think there's a lot of cost savings and revenue potential already. If you think of agriculture, if you think of the insurance industry, if you think of large industries, actually, where adaptation technology can create these new revenue streams. So, if we don't do it today, then it's too late. And that's the urgency that we're trying to impart, like in our own investment practice.
Thank you, Maëlys. This was all very interesting, but just very quickly comment on what you said about adaptation not being profitable. And that's definitely a myth that I think together with you, the lab also tries to combat. But that's the particular relevance of initiatives like the Catalyst Fund, right? Your success also helps inform other investors that this is actually not something that it would be nice to do, but it's actually an interesting economic opportunity with a lot of space for growth and returns of investments to be made. So thank you for your answer. With this, I will move on to a question for you, James. When you started your introduction, I think you already touched upon the issue of valley of death, and that's what I wanted to explore with our audience today. Could you define to them what exactly you mean by valley of death, and what are the
Yeah.
gaps that you identify in the ecosystem that kind of need to be filled further to support the startups in Africa? And maybe a little bit of the role of the financial institutions within these
Yes.
gaps. So sorry, it's one but three questions, really. Over to you.
Excellent. I really should have studied for the examination today. It's not a joke, yeah. Um, so valley of death is a term that's used often to varying effect, referring to different aspects of the investment journey in different contexts, right? It can be the journey in scaling and so on and so forth. I think what I'm observing in the climate space is to the extent the climate sector has some interesting dynamics. The first one is you've got enough unproven or new technologies where you really need something that's like a traditional venture model, like what each of us is doing, where you're backing things with relatively modest but high risk tickets of funding, and you're getting, to some degree hands-on, or you're spreading your bets in a particular way. The challenge is that model developed largely, in the Bay Area of California to really drive the tech revolution is one in which you raise successive, slightly bigger rounds or somewhat bigger rounds of capital on a business that's acquiring customers very, very fast, right? You're adding people onto your messaging app or your dating app or whatever. And you're seeing that growth in scale, and so you're adding you're adding dilutive capital, but you're growing faster than that. And by the time you need really large amounts of money, you've actually built the potential to generate really large amounts of revenue. In climate, you have the same level of high initial innovation, actually greater levels of early innovation in even the basic technologies here. You're often doing something that hasn't been done before. But very quickly, if you take a business like Great Carbon Valley, the kind of capital we need looks like infrastructure money, right? And there's not really an easy way to go from a venture-funded set of interesting agreements, access to market and technologies, to raising $100 million to build an industrial park. And the kinds of blended finance that you then need to bring into. And that's true not just in Africa, but it's actually true globally. Or in the case of Asafi Organics, you're suddenly needing to raise a whole lot of debt in a whole bunch of different locations to build these small distributed factories. And so the valley of death takes a few different forms. One is the traditional one of, in Africa, you really don't have much money in that middleweight level. That's not the banks looking for completely de-risked businesses or the early stage venture money. But it is also the fact that relatively early in the journey, you're needing to navigate the different, you're having one meeting in the morning with venture capitalists in jeans and sneakers, where if you're wearing a tie, there's something wrong with you. And in the afternoon, you're sitting at a development finance institution and you have to be wearing a tie. And you're having to explain exactly how you will be able to structure a relatively predictable 10% stream of returns for however long as part of a bond to build a structure. And there's a need for a type of finance and a type of support to finance, including technical assistance, that helps these businesses navigate that stage, because they will need to be bilingual. They won't be able to graduate from one to the other. They will need to keep doing both.
Great, thank you. And I cannot agree more, not only in the African context, but this is something that we see in the lab or in general when we see blended finance, right? You're trying to talk to VC at the same time you're trying to talk to development finance, different languages, different approaches. So yeah, thank you so much for your answer, James. The one question for you now, Caitlin. When you made your introduction, which by the way, I love the idea of Love Island meets Shark Tank, sorry. You mentioned building African startups by Africans and for Africa, which I really liked. And I wanted to kind of go a bit deeper on this topic. If you could talk a little bit more about the geographical distribution of innovation within Africa. You know, you mentioned in your intro the relevance of South Africa and Kenya, but are you seeing more initiatives emerging elsewhere in the continent? And are there any specific efforts to try and identify and encourage these opportunities?
Yeah, it's a great question, and I kind of touched on it previously, so maybe I was premature on that. But I guess what we have seen and what we didn't predict with this cohort approach of bringing together founders from Kenya, Uganda, Nigeria, all different parts of sub-Saharan Africa, imagining that the Kenyans will co-found companies and the West Africans might and the South Africans might, but actually we're seeing that actually across the continent, co-founders we've got one team that's looking at how you can use food waste to make a biofertilizer that reduces runoff into rivers, which is great on so many different levels. Like we know food waste is on Project Drawdown, probably the biggest problem. But we've got one Kenyan, one Ugandan, and one South African, and that actually becomes a really interesting strategy because then you are de-risking in certain ways because you can peg in different countries for different reasons. And so I guess just to say that there is talent across the continent, and maybe tying into the question you asked my Lise on some of the myths, like I don't know how many times we've all heard there's no deep tech in Africa, there's no science in Africa, and it's so not true. There are brilliant universities across the continent, and you're seeing, like, we have a scientist from DRC who's done his PhD in Belgium and now doing his postdoc in Canada, and now he's building a company, soil science, biochar, enhanced rock weathering. And it's just like, yeah, so I guess to say there are gems in different places. There are certain universities that are probably better at supporting IP spin out. And I think there's a lot more that we need to be doing to help companies with some of these negotiations, because you see like some innovations where the universities take 70% of the technology before it's even commercialized. So hotspots, as I mentioned, were South Africa and Kenya from what we saw. And maybe a second myth is that a good founder has a certain profile, must be over 35 years old, must be a repeat entrepreneur. But what we're actually seeing, another interesting approach is that you're blending youths with more experienced folk who each bring different elements. You've got your hustlers who are going to bang down doors and not listen to the rules because they haven't been tainted by being in those industries. But then you have the more experienced operational co-founders who are like, whoa, we need to speak to, as James says, the DFIs, we need to wear a suit. And so I guess maybe to round that out and just say that there is a lot of power and diversity from what we're seeing, and this is just the beginning of the journey. But that's an interesting trend that we didn't expect, and one that I think playing to the strengths of having a lot of different countries which have different perceived risks relating to governmental movements, regulations, corruption, and the likes, which a lot of it is perceived. But if you can diversify it across the continent, then that's a helpful way to diversify it.
Thank you, Caitlin. I think it's particularly interesting for me to hear what you said about when you're looking for entrepreneurs. Many times, and that's how perhaps traditional venture capital goes about looking for a certain specific model, right? But if we're just funding the same people that have been doing the same things, how are we going to expect to achieve different results? So I think that it's really interesting and ties with what you mentioned earlier, Miley, about purposely wanting to invest, for example, in female founders, which is a great initiative. We have 4 minutes in the end of this session, and we have a lot of questions in the chat. We're not going to have time definitely to go through all of them, but perhaps we can very quickly do a one round of questions for each. And I'll start with you, Mylis, which maybe is an ambitious question to ask for this short time is what metrics are you using to measure resilience? And what challenges do you face when trying to use these metrics? This is like the toughest of them all.
How do I fit it in 60 seconds? So great question. I mean, we really spent a lot of time trying to define which metrics we could use also with such a diverse portfolio, right? Because not every company will be able to contribute to each one of the portfolio level, fund level metrics. So we decided to roll up, so basically choose 5 at the top level. Lives more resilient to climate change, and we actually built an internal tool. It's like a WhatsApp bot that asks specific questions around resilience to the users of our startups so we can get data over time, not just point in time. Then the second is CO2 emissions avoided, and that includes avoidance in the agriculture sector. And not direct mitigation. So we calculate that. Plus we have hectares of land restored, liters of water conserved, and tons of waste collected because we did invest in 2 waste management as circular economy models. So we decided to track that. Then for each company, each of them will have 2 or 3 specific metrics because each business model is different, right? So think of an agriculture business will measure also income increase, yields increase, and specific subsets that are relevant. Or insurance, number of people that are accessing insurance for the first time, or number of climate risks addressed, or climate events, disasters addressed with that insurance versus others if there's a mixed model. So we do that, we break it down. The most challenging thing is accessing accurate data from companies this early. And I think impact measurement has to be proportionate to the stage, so the ambition basically of collection to the stage of where the company is. And we work closely to our founders to build that muscle and even the, frankly, data infrastructure for collection, because a lot of companies don't have it.
Excellent. I'm impressed that you were able to squeeze all these in just a couple of minutes. So I'll try to get one in, piggyback off your comment on challenges. One perhaps to Caitlin and James. What are the biggest challenges that the founders in your portfolios have to bring their solutions to the market and scale, besides, perhaps the first obvious answer, which is capital? And then I'll let the two of you respond.
Thanks. So bearing in mind the stage that they're at, which is meeting co-founders and finalizing which problem set they want to focus on, it's really thinking about how do you pin a problem set that is your, what we say, you'll die on a hill for. So if it's water, how are you going to find a solution that, who are going to be your customers? How are you going to prove it? Who's doing it elsewhere? So I think in the early stages, the problem set will be slightly different than if you're looking at the second valley of death, which is more first of a kind financing, which is something that we would like to help them with down the line, which is how do you bring different types of capital, which might look like first, last, debt, equity, all together in a way that infrastructure scale financing does take, and we can learn from how, for instance, renewables in the UK looked, how could we apply those models to carbon removal projects in sub-Saharan Africa, but do it at a much more accelerated rate from when the first solar panel was built to when they were deploying hundreds of millions into solar plants. We basically have 10 years to figure that out. And so I guess where these founders are right now is figuring out this go-to-market strategy. And I think where in 3 years' time, a good problem that they'll be having is how do they raise $100 million to scale it?
So I think we see 2 real challenges. The first one is just a lot of our businesses do tap into various aspects of climate finance and of the carbon markets. And one big drag has been just the reputational damage done by a few bad apples or poorly structured, low integrity, low quality projects that create an impression around African climate initiatives and projects that just drives down the value of credits and makes it harder to sell them. And so a critical thing is just recognizing as a continent the existential importance of driving carbon market integrity and carbon quality in terms of the things that we're doing. So that we're really saying we're enforcing the highest standards, and the mark of quality is that something is being done on the continent. And the second thing is, for a lot of these businesses, you really are looking at a big systems shift. So you have a lot of interdependencies. If you're building an industrial park, you have multiple counterparties. You have the owner of the land or the asset. You have the owner of the technology that's looking to deploy. You have the financier of it. And you're trying to get a whole range of trains to arrive at the station at exactly the right time, where if they do, they all feed off each other and something can really take off. But you're looking for founders who are really spending a lot of time just nudging different actors that they depend on. And then conversely, in areas like agriculture, they're working against systems that are almost deliberately broken, right? There's a reason why, there's this bizarre reality in which African countries are bankrupting themselves to subsidize imported fertilizer that is bad for, ultimately not the ideal for the soils, is not being used in sufficient scale to begin with, and doesn't build local economic resilience or climate resilience. And the entire subsidy regime is oriented that way. And getting that to change, getting people to believe that these green solutions are actually in many ways better in terms of their long-term yields, is a journey, and then requires that same collective action component around people holding hands and leaping together to create a system that can deliver results for farmers, for the planet, and for the economy at the same time.
Thank you, James. Thank you for sharing your perspectives. And unfortunately, I feel like this conversation could extend itself way throughout the afternoon, but unfortunately, we need to wrap it. So I just really wanted to thank you, James, Caitlin, and Mylise for the time coming here to have this conversation with all of us. Hopefully, it was interesting for you that have stayed with us till the end. Thank you very much for this opportunity, and take care.
Thank you, Amanda. You were
Thank you so
amazing.
much.
Thank you, Amanda. It's been such a privilege. Thanks, Caitlin.
Thank you.
Bye, Melis. Take care, all of you.
Bye, James. Bye,
Bye.
bye, Amanda.